Welcome to Dave and Dharm Demystify, a Fintech Futures podcast, helping make sense of the world of fintech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystify.
Welcome everybody to the Dave and Dharm Demystify show, and I have been waiting for this introduction for some time because this week, everybody, we have Bond. No, not James Bond, but Bond.ai, and the founder, Uday Akkaraj. Welcome here, and I am actually genuinely excited because I've seen some of what you do. Well, before we get into that, can you give us a little bit of an introduction about yourself and of the company?
Sure, but thanks for that introduction. Maybe if it was a video, I would have done that pose for you. Yes, it is Bond.ai, but I mean, funny, just a story that actually the James Bond franchise also reached out to us for the domain. That's a funny story, but...
Wow.
To introduce myself, yes, I'm the founder and CEO of Bond.ai. As the name suggests, it is an artificial intelligence company, but our goal from day one has been, why we call it Bond, is we want to enhance the relationship between the consumer and a financial institution. That's the thing. We really believe that is broken. We've been talking about it for a while and everybody talks about it because the banks are getting too big. The small banks don't have the operational income or the liquidity to pay attention. The loser is the customer. So that bond is really broken and we are here to rebuild it in the best possible way.
Fantastic. I mean, so how long has the company been going?
It's just about 4.5, 5 years now, coming up to 5 years.
And Uday, can you give us a bit of your background as well? So how did you end up with a company looking at sort of solving this problem?
So I'm by qualification a human-centered designer specializing in cognitive psychology and intelligent virtual agents, which are actually called bots nowadays. So that's my background, where I really study the human aspect of it, what the human needs are, do a tremendous amount of ethnographic research in my past. So all my work, all my life has been around understanding the human needs, what the real needs are, not creating needs, but what the real needs are and how we can come up with solutions, be it using cutting edge technology like AI or just Excel or data sheets. But the fundamental goal is studying the human behavior, studying the human needs and coming up with a problem.
That doesn't sound specific to banking. So why did you choose to go into banking or financial services with this knowledge that you've gained?
I'm a complete outsider to banking, except for the fact that my mom worked for a bank for 33 years straight.
Oh, wow.
So I saw my mom working for a bank. I never wanted to come into banking because it was banking every day in my house.
Don't blame you.
Yeah. So never wanted to do it actually. But when I came to the US as an immigrant, I mean, it was fascinating, of course, because I ended up in Silicon Valley out of any other place. But, you know, Silicon Valley is not cheap. It's expensive. Cost of living is expensive. So coming from India to Silicon Valley, it took some time to figure things out. And in that process, I mean, I was getting a good paycheck, don't get me wrong, but I was living paycheck to paycheck. Because for a shoebox, a size of an apartment, I was paying a lot of rent. And I was like, why am I paying this much for nothing? And so I was living paycheck to paycheck. There was a financial situation in my life in Silicon Valley when I was living. And I was like, oh my goodness, this is happening to me. Is it happening to me? And it actually happened to me. So to figure it out, I went to my banker, which was, I don't want to name, one of the top 5 in the US. And I said, can you help me out? Because I'm new. I have a good paycheck. I have decent, credit to start with. He's like, nope, I cannot help you. You are in the situation. You're in a downfall. You have to figure it out yourself.
Wow.
Yeah. So
That's helpful.
yes, very helpful, right? I mean, went to a couple of other financial advisors. They used to call themselves. Went there, asked them, nobody helped. So because I was in the tech sector, I started downloading apps like, Digit. There's a lot of apps, so 18 financial apps. Exactly, I'll tell you. 18 different financial apps on my phone, downloaded it and trying to figure out a way. 6 months passed, it was not improving, it's just going downhill. I said, no, this
Do
will
you
not.
know roughly how many of those were actually from banks versus fintechs? Just out of interest.
I think it was a good equal split because I started using the fintech apps. There was a dependency. I said, no, no, let me use the banking apps. So it was, I think, a good mix of both.
Okay.
Yeah, I mean, seriously, financial wellness, financial health, everybody has been talking about since then, but 6 months down the line, it never helped. I had to figure a way out for myself. So started looking at, as a behavioral scientist, as a cognitive scientist, now I'm looking at my own data. So it was ironical, but I'm looking at my own data. It took me 18 months, but I came out of it successfully. Realized a lot in that process. So that was basically the foundation of me entering into financial services.
Right. So you were in a financial hole and you were looking for solutions. You had to work it out yourself, and you believe the answer was in the data of your own finances.
Yeah, it's not data in the sense of transaction data, right? That will not help you at all because all the apps are using your transaction data and trying to map out your behaviors. Come on, they can't even map out 10% of my behaviors. Yeah.
Give us an example of a behavior that can't be mapped from the transaction data, like, for example, and where would you get that data then if it's not from the bank?
I mean, the most important thing, right? I'm like you talk about psychology, it's about context, right?
Right.
I mean, you know a transaction, but you don't know the context of why you did that transaction. That's fundamental of mapping any behaviors, right? I mean, you have to know that factor. Then you don't know about your other interests, you don't know about your potential or your ambition. There's so many soft data points, not the tangible data points. You really need to know before making a prediction. Otherwise, it'll just become like a useless prediction from AI.
Right.
It's so interesting, I guess, because the banking industry has remained steadfastly attached to the transactional way of doing things. So my background is user experience and design as well. And over the years, I tried to kind of work with organizations to sort of help them think about why people would be their motivations for doing things beyond the sort of goals and all dreams and all the other stuff, which kind of banks. But I really agree with you, like that context of a specific transaction is never captured. And the mental models or the way people are kind of thinking about money in a moment is just never captured. So is that one of the things that you're looking to solve with Bond.ai or?
Yeah. We take this. I mean, your life is a story. Simple as that. It has multiple chapters. Those chapters are not designed on day one, right? There's so much happening. You're talking about attention spans less than a goldfish and all that stuff because it changes so quick. That's why it's very important to have that constant feedback loop with a bank or a fintech, or doesn't matter with what a consumer is doing. That is critical. Nobody has that constant feedback loop with the consumer. If you make an assumption today of why that transaction is done, for an example, just next second, the context will change. That's what you need to really map out.
Yeah, it's a bit like, first I want to show that actually we make the same mistake as human beings, right? So one year I started to play golf with my friends. And for my birthday present, all of my family, all of my friends bought me something to do with golf. And even though I had stopped playing the following year, the second year, I still got golfing presents. And it's based off one time I went golf, right? And then, I liken it to Amazon. Like I bought a gift for somebody, right? They obviously didn't know it was a gift. But then suddenly I was getting, it was a cookery book. And yes, I do like cooking, but I don't typically buy cookery books or cookery utensils, etc. But all of my ads from Amazon suddenly start to switch towards cookery all of a sudden. So it's kind of like one piece of data doesn't show the full picture. That's what you're saying, right?
I mean, exactly. I mean, you see, we are in the age of ChatGPT. Okay, you see what brilliant things it actually can do. But if you open Instagram, TikTok, whatever app it is, it's exactly what you said, Dharam, right? You do one thing and everything follows up. You browse for furniture. You don't need furniture next day because you already bought it. You still get furniture.
So how do you overcome that? I mean, like, it's not like you can have something that's got their eyes and ears on you all of the time. So how do you overcome the lack of data outside of banks?
I mean, exactly. That's what I said, that feedback loop between the consumer and you.
Right. Okay. So you need to be constantly engaged to understand the context. Is that right?
Exactly. It has to be, I mean, this is a no-brainer. I keep telling everybody I meet, this has to be applied in every domain in this generation. Even if you walk into a doctor today, they give you a checklist. How is your sleep? How did you do all that stuff? That's again a one-time thing. They will base you off that. They'll create that baseline for you and basically treat you for the next year. Wrong, right? I mean, you have to have that consistent feedback loop of every day, how was your sleep and all that stuff. But there is a way of collecting that information. You cannot overwhelm the consumer
Yeah.
and all that stuff. We can dive into that.
I was going to say, because if you're, I guess one of the problems with the sort of financial services industry is people aren't looking at their phones. They're not looking at the apps the whole time. I think there's a kind of mismatch because I think people think about money an awful lot, but they don't have the sort of means to kind of do anything with the thinking that's kind of going on in their heads. So how do you encourage people to create that effective dialogue with their money?
It is the most difficult thing on this planet, right? that is the thing, because the biggest factor for people to actually start sharing with you is, we all talk about trust. At this juncture, I think trusting you is extremely difficult. And especially with our businesses where we are a B2B2C, we actually work with the financial institution, then the financial institution actually rolls this out to their end consumer. We are actually the indirect ones. The trust comes from the financial institution. So for us, it's extremely hard to create that feedback loop. But I'll give you a percentage. Out of the whole consumer base we have, we've built that trust from less than 10% of the people. I'll say that. It's a single digit. I'm not going to lie. But if you see the translations of those people who actually really trust, we are really able to map out and make the predictions. But for the majority of them, we are not. I mean, none of them in the industry are, frankly, that is the fact. Nobody can, even if you want to give insights, there are so many companies which give fantastic insights, but they are not applicable most of the time. We talk about nudges. I mean, you must have read the nudge from Thaler, right?
Theory, yeah, definitely.
Yeah. That theory works only if you're constantly giving the right nudge in the right direction. Otherwise, all those nudges actually become noise.
Yeah.
I was actually writing a book, Nudge to Noise or something like that.
You should write it, because I've seen apps doing that. They constantly ping you, and the next thing you know, you just delete the app.
It is about, I mean, in my head, I think it is about how you create that kind of dialogue. In a weird way, we've all been trained not to have that relationship with our money, because I think, you know, we've been there through the whole sort of digital transformation of kind of banking. And my observation has been that if you look at the sort of UX industry, its job is to get people in and out of banking apps as fast as possible. So that whole notion of slippiness that the UX industry talked about, which was like, don't impede people as they kind of go in, and if they want to pay a bill, don't get in the way of them paying the bill, and all the other bits and pieces. So we've all been trained not to kind of think about money in an odd way. And I'm kind of interested, what are sort of some of the techniques that you kind of use to try and build that trust and that relationship?
It's simple. Gratification. Two types of gratification: instant gratification and long-term gratification. And you have to play in between those two. Why did you do it? Just say a simple question like that. First time they won't give an answer. Second time they won't give an answer. Eventually they will give an answer. So the question is not the same every time. Why did you do it? If you ask the same question every time, they're never going to give the answer. They're going to delete the app. But it has to be a different form of phrasing it every time you see some tangible transaction. Then based on that, now you identify in a series of behaviors. Again, I'm saying you won't be able to accurately predict the gratification, but you'll be able to at least assess what gratification you can actually give that particular consumer. And then it's a hit and miss. But the thing is, right now, nobody's even giving that. What we realize, even though we are doing a hit and miss, people are appreciating that fact. And that hit and miss will actually become more concrete, more concise, and more accurate. And even if you see ChatGPT, that's the same. You can see it doing some great stuff, but it's not accurate enough, but people appreciate what it is doing today. It's the same philosophy.
So when you're doing this, are you doing it at an individual level, or do you have a sort of set of rules that you're kind of basing the sort of questions on? So how are you kind of driving that?
So initially, of course, it was a rule. Later on, it became automated. So yeah, you can't just do manual rule-based systems anymore for such a large audience we have. Yes, initially it was based off a few rules and a few questions, but now it's automated. It generates based on the tangible event.
I guess if it was every time I did a transaction, I got asked a question, and even if it was a slightly different question, I'm trying to think whether that would kind of engage me. Have you got other ways of sort of drawing people into conversations about their money, or?
Yeah, so I think I'll tell you 3 stages which we are doing. So first stage was like I discussed with you is not after every transaction, but we will know at a few different transactions based on the size of the amount, the location where they're spending, the kind of store they're actually spending. So we actually put those questions out, right? So if it is for a small event like a gas station, we know it's like, okay, there's no brainer, right? So we don't do that. So the questions are spread out based on the predictive context. We think it's important, but it might not be accurate. So that was the phase 1. The second phase was much more accurate. Now we actually know the context better. So the questions were actually put down in a certain periodic manner. The third one was we made it actually proactive. The first one was very reactive, right? The third phase, we actually did proactive. Okay, now whenever you need something during or before and after a transaction, just send a message. So that way, we actually built a lot of good database of the intents. Now they call it prompt engineering. So the intent of what people actually wanted to do before and after. So combining these 3 phases, I think we have so far a very good model of giving those gratifications I spoke about.
In terms of the sort of, you talk about gratification, what does that kind of look like? Can you give us some examples of what that?
A gratification need not be tangible, right? I mean, you do not give a reward or a cashback or something like that actually will never work. I mean, it'll actually work lesser. So I'll give an example, which I always give. So somebody asked us if they were actually using the right airline credit card. So we actually said, no, this is actually not the right one. This is actually the right airline credit card for you because of X, Y, and Z. If you want to do it, we'll actually get it for you. Complete the journey, even the last mile. So that will build a trust. Even though it's a very minuscule nudge in terms of getting them the right thing, it actually builds the trust. Later on, I mean, in fact, we can talk a little later about what we're doing next. But the consumers were asking us about something we were actually not doing at all. Example, on the healthcare side.
Right.
We don't do anything on that front, but that kind of gave us an idea that, okay, we need to start thinking more than finance, because finance is related to everything, especially health.
So you gave us this little intriguing thing. We're doing something else. What is that something else?
Yeah, something else is exactly. So we've been about financial health till today, not today, but say till end of last year. We were talking about only financial health. So all these insights, all these nudges, all these contexts we were establishing were only in the financial context. We felt limited. Even our consumers felt limited because, like, I mean, Dave, you were mentioning, they don't come to the app for hours together because they just come, they see a transaction, maybe they verify something, and then they go out. But we still give notifications, but notifications are so many nowadays. People can't even look at what notifications are. So what we realized was if we tie up finance with the other aspects of a human life, like health, there are so many other things also, then it starts adding up. People will realize this is important for me and they will start paying attention. This is not for us trying to get their engagement and trying to get top of wallet or getting their screen time, but actually stitching or creating the bond between what is important in their lives. So right now, finance and health we are going after the 2 biggest pillars for anybody. So that's exactly what we are going after is health.
And can you just tell us a bit about what that kind of looks like? Have you combined health into the existing app, or is it a separate app? Or
yeah, so I think, like I said, so far we've been only business to business, but I think we are going towards the consumer directly through employers, not banks, because selling to banks is the most difficult thing on this planet. I mean, I'll just say it in the ear.
Yeah.
You're right. I mean, it's not that they don't want to buy. I mean, there's so many rules and regulations in front of them, they just can't help it. But the consumers, like I said in the beginning, the consumers are the ones who are suffering. So we are going to employers and offering this. So even our financial insights have evolved And what we are focusing right now, based on all the data we have collected, is people really, end of the day, just one thing matters for them. If you're given insight, don't spend at this restaurant, or if you're given insight, you're not spending with the right credit card, that doesn't really matter. In a holistic scenario, what people really want is to achieve financial freedom. That's it. That's the one KPI. So all our financial insights today and in the future will be focused towards that. And similar way, on the health side, we really realized about the data is people want to have a better quality of life and basically extend their health span. We call it not extend their lifespan, not live 150 or 170 years. But it is all about, if you see the millennials or even the Gen Zs, they want to live maybe 65, 75, but they want to have a very good quality of life. It's all about longevity, extending their health span. So that is where we are going after in the health side.
It's so interesting. Yeah, I mean, I love that kind of thought about health span rather than lifespan. I mean, it's so applicable to money as well, isn't it? Like, I was talking to my family, we just come back from holiday, and obviously as soon as you get back from holiday, you start thinking about the next holiday. And we were talking about, me and my wife were getting older and we want to enjoy life, obviously, and the kids want us to enjoy life. And it was sort of a really interesting conversation, because the feedback from the kids is, well, you should maximize whilst you're still healthy, you should maximize your money opportunities to do the things that you want to do. And, it's kind of interesting to get that view from them. And I think it's absolutely right. Sort of money and health in that way kind of combines intrinsically together.
I mean, our belief is exactly this, right? I mean, you can work till maybe 65 or till the last day of your life. That's not an issue, but you should not depend on money till the last day of your life.
Last time I sat down with a financial advisor, he showed me my cash flow until the day I died, assuming that I made it to 99. And that, exactly what you're saying, is wrong, because, like, when I'm 99,
How does it matter?
what does it matter?
Yeah, I mean, so what matters in your life? I'm not going philosophical, but human-centered design, right? What matters to your life is very important. All of us, I mean, are so busy till we are 55 or 65. Tell me one guy who doesn't repent what he's not done before when he was 35. I mean, it's extremely common. It's fundamental to our society. So our belief is, I think you should just achieve financial freedom way early in your life, like 35, maybe early 40s. Then the rest of your life, do what you really want. Because if you see, I mean, all the other data, I can go along and on this, but if you see, the human productivity is also decreasing over a period of time.
Mm-hmm.
And if you see, especially in the last 2 decades, it's gone even down. The reason, we don't have time to do anything. The quality of time we have, it's not there. We are too distracted. There's too much noise out there. And because of that, we don't know what priorities we have. So I think that needs to really change. We need to go back to the basics.
Yeah, I think it's fascinating, this link between the quality of life and your finances, because I read an article the other day that basically said, look, I'd rather live and enjoy life to the max till I'm 70 than live till 90, where the last 20 years were miserable because I was ill and I couldn't do things, etc. So it is about the kind of quality of life. And a lot of that is to do with your finance. But how do you know that you've got enough money in case you get ill later on? I guess that's part of the challenge.
Yeah, and I don't know if you guys have seen that video, right? I mean, 2 things we really need to fix here. First of all, the way you make money, right? There are so many other ways you can actually make money. Just working on a job is not important. Majority of people think making money is just getting a paycheck. That thing has to be eliminated from your brains. Okay.
Yeah.
The second thing on the health side is the insurance system. I'm not talking about, I mean, UK has a different insurance system here, but any insurance system in the world makes money by denying you care.
Yes.
Right? So that insurance system is sick care. It's not preventive care. So when you're sick, you use it, but you're getting sick because you don't have whatever priorities in life, and then you start using that insurance. So if you think about this, it's fundamentally flawed, the whole thing.
So I'm kind of interested, because you talk about preventative as well. I think that's so right, that so much of what we need to do for better health in the future is around living healthier lifestyles. I was listening to some doctor on a podcast the other day saying that the health problems of the UK could be solved if everyone had a dog, because dogs are so good for, that was his prescription for the UK, is just give everybody a dog because that gets them out, and, dogs are great for mental health and all the other bits and pieces. I mean, I can really see the opportunity if you can kind of combine the data together because I think money, and it's something I've written about, tend to have a very bad relationship with. And if you can use health and money combined to kind of create better relationships with money, but also your sort of future health from a kind of future self from a health point of view, I think it's a really interesting space to be in. And I think also going after employers is a really interesting way to do things, because that important moment when money drops into people's bank from the sort of salary on the sort of last day of the month or whatever it is, it's a real pivotal moment, which opens up opportunities for more conversations, doesn't it? In terms of everything, to be honest with you, to do with money and health. So,
yeah. I mean, frankly speaking, right, two things. We are unfortunately living or fortunately living in a capitalistic society. So anything we do money is foundationally important. So if you have to have a better quality of life, even if you have to have good quality water, you need money. Good food, good water, good anything, you have to have money. So imagine, I mean, mineral water was not like this before. I mean, it costs $6 to buy a bottle of water. It's unbelievable.
That's insane.
Yeah. So I think, unfortunately, it is a linear story here. You need to be financially free to actually think about your longevity. It is like that today. Maybe it'll change tomorrow, but that's what we really want to solve.
That's really interesting. Well, listen, time is sort of running short for this. It's been a fascinating conversation. I'd love to have a look at the apps and what you're doing in terms of health at some point. So,
absolutely. The good thing is we have open banking. So we need not wait about scaling this country to country based on local data, but good thing we have open banking. So I think we will be spreading faster across the globe, not having a strategy for just North America first and the UK next. I think we'll be doing that parallelly in the next few months, actually.
Amazing. Well, we look forward to your story kind of unfurling over the next few weeks, months and years. So thank you so much for joining us. It's a really interesting space to be in.
Absolutely. Yeah. Thanks for having me. I think, yeah, like you said, we can talk more. This is a very important topic, but we'll keep that for later.
Fantastic.
Thank you.
Thank you so much.
Thank you for tuning in to Dave and Dharm Demystify. We hope you enjoyed the show. Don't forget to like and subscribe, and tune in next time as we take another topic and demystify it.